Hello everyone, welcome to today's episode of Insight with Oladejo. This is Oladejo Adeyemi. I am your foremost business coach who designates his time to reading the tax laws so that you don't have to spend as much time doing the same. I've gotten questions from a couple of people. How do I file my taxes? How do I make payment for my taxes? Is it that the government will assess me? Am I going to assess myself? What happens when I file and all of that? And that will lead me to us unpacking a particular provision in the tax law, which is Section 34 of the NTA, speaking to self-assessment. So this is how it works generally in Nigeria. In some jurisdictions, the government would assess every individual and every entity to tax based on information available or information at the disposal of the authorities. But in Nigeria, there are many types of assessments. The basic form of assessment is the self-assessment. And that provision places that obligation on every taxable person to declare, the details of their income for an assessment year via what we call self-assessment. So you will, at the due date of filing returns, assess yourself to tax. You will by yourself provide information relating to the income and the expenses, if there are deductions that you'll have taken, based on the provisions of the law, you will do that by yourself. That is what we generally call self-assessment. It is more like you using your hand to disclose that this is the quantum of income that you earned, and you would also, of course, provide the details of the expenses, that you bore in relation to earning those income. Now, what then happens, based on this provision? The government may accept your return, in which case there will be no additional assessments. The government may reject your return, and the government may say, well, we take this that you have filed, but in our view, the tax authority feels there are still other things, and then there will be additional assessments. And in the case where your returns are rejected, then the government may raise something that we call best of judgment assessment, that in their view, the information you have provided does not tally with what they have, and then your return will be rejected, and then best of judgment assessment is going to be raised on the taxpayer. So there could also be additional assessments, in a case where a complete review is done and all of that, but we're not going to focus on that just yet in this episode. So this episode is really to emphasize how tax returns, how taxes are reported and how tax returns are filed, in the sense that tax returns are filed in Nigeria on a self-assessment basis. People that felt, government is just going to dip their hands into their bank accounts, technically, and just take the taxes, given that this section is within our tax laws, that will be practically impossible for the government to do, because tax returns are based on self-assessment. What then happens if you don't file any returns? You have to stick around to this channel, continue to like, continue to share, continue to subscribe, till I come your way in the very next episode. Bye for now.